Well, I think we've all been there and totally screwed ourselves. And unfortunately, I think many of us are at risk at doing it once again, and this is not the type of market you want to do it in at all. This is the type of market where you make a fortune, but mistakes can absolutely destroy everything you're trying to do and everything you're trying to build. So let's talk about all the ways you can screw yourself, and I just ask in exchange for you to generally, tap that like button. So if you don't like screwing yourself, tap that like button. That's a good reason to tap it, right? Make sure you're subscribed to if you like content like this and if you want to see my future content, because of course YouTube won't show it to you, even if you're subscribed, if you don't have the bell clicked and all that good stuff like that, because I don't know, it's YouTube, it's 2023 now. Almost messed that up, and they still can't get that right. So make sure you're subscribed and you get the bell clicked. Now let me be clear and upfront with you guys up front right now. I am talking about myself as well. So this isn't me pointing the finger saying you should do this and I would never do that or anything else like that. I've done them before. I did them 20 years ago. I did them 10 years ago. I did some of them last year. I bet I do some of them again this year. That's one of the reasons why I wanted to make the video selfishly, so that way I can remind myself, hey, don't do these things because these mistakes are just killer to your portfolio and what you're trying to do with your investments. You got to kind of hear some things you may not want to hear or understand some things that you may be messing up that you need to correct. And again, I'm talking to myself just as much as any of you guys out there, so hopefully this is helpful. So the first one would be listening to the media, and you guys know exactly what I'm talking about. I'm not talking about just Cramer here. We all know he's Cramer, right? They had a Cramer index for a reason. I'm talking about listening to all the other media sources, whether that be Fox News, CNN, MSNBC, all of those guys out there. Every single one of those shows, and Cramer's admitted before actually, those people that come on those shows are traders, and a lot of those traders, according to Cramer, are actually trading their book on the show. So they're basically talking to you and giving you information, all the while knowing exactly what they're investing in and basically giving you a narrative and giving you a piece of something that basically creates the best trade for them or the best scenario for them as investors for themselves. But even more importantly than that, they're traders. I'm a long-term investor, so I assume if you're watching my channel, you're a long-term investor too, and that means I don't really care what a trader wants to do, because of course the trader's going to run over here to this sector because, this is the hot sector for right now, because they're trying to get 3 or 4 or 5% gains here, and they're going to switch over to this sector and try to do that, and they're going to get in and out of stocks and make this trade, and then I'm going to short this and put out a put on that, and blah, 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 blah. I don't do any of that sort of stuff. I'm a long-term buy and hold investor, so there's no reason to jump from this to that to the other to whatever. But when you're watching those shows on MSNBC or CNBC or whatever, you are getting perspectives from a trader's standpoint. They are talking about trading this market. They're not talking about long-term buy and hold investing at all. They may say I'm long or this or that or whatever, but the vast majority of them and the context that they're talking is very, very short-term in nature. Basically the next week, the next month, maybe the next quarter at the max, but that's about it, guys. So for me, it's absolutely useless to watch. Now, sometimes they drop nuggets, sometimes there's a little bit of good piece of information in there, but if you're not experienced enough to know the difference, you can get yourself in a lot of trouble listening to the media, so I choose to not listen to any of it at all. Just is going to cloud my mind, cloud my judgment, and I don't need any other noise in my life to help me not invest the way I need to invest and to make money. So I just ignore it all. The second mistake that happens right around this time right here is listening to Wall Street and all the analysts and all the experts and all the banks putting out what their 2023 predictions are. And let's just go back to last year, 2021. At the end of 2021, virtually every single Wall Street firm, analyst, everyone had 2022 being a great year. Now, I'm not talking about people who switched their narrative, basically in March, whenever it all started going south. I'm talking about 2021 when the stocks were basically at all-time highs. Everybody had 2022 looking great too. Except what actually happened in 22 was the exact opposite of what they said. What do you know? They were completely wrong. And I know that's shocking, guys. It's actually not shocking to anybody that's been paying attention, but this is routinely how this all plays out. And now let's think about what all of them are saying right now. Everybody has 2023 being the worst year ever. Now, I'm not saying it couldn't be the worst year ever. It might very well be. Again, nobody knows, and I'm not here to make predictions. You guys know I can't stand all those folks out there making predictions and making all the short-term this and short-term that. I'm going to make 47 different predictions, all other stuff like that. Don't like that sort of stuff at all. But it definitely makes me kind of pause a little bit and kind of go, well, wait a second. Last year, you guys, the experts, all told us that 2022 was going to be great, and it's been just a disaster year. But now you're telling me 2023 is going to be a disaster year, and it kind of makes me wonder, well, is it really going to be that disastrous? Or we're going to have basically, maybe a bad month or two here at the beginning as we kind of sort through some of the earnings and some of the other things that go. And then after we kind of get that little final leg, that final flush out, and everybody kind of basically gives their guidance, it's basically back to business as usual. I mean, I don't know. I'm not here to make those predictions, but it definitely makes me pause and wonder, should I really listen to that and then bet my investing future on that? Or maybe I should look at actually, betting my investing future on things like valuations and stuff like that instead. Either way, usually every year listening to Wall Street gets you screwed far more than it gets you whatever the heck the opposite of screwed is. Yeah, that. Good stuff, good stuff. Yeah, you rarely get the good stuff. You usually get screwed. So number 3 would be listening to other YouTubers. And guys, I got it. That can include me too. I don't want you guys to necessarily quote unquote listen to me either. But this past year on YouTube, if it didn't prove anything else, it proved that there's a lot of flip-floppy craziness that goes on YouTube, and everybody that says they know something and wants to prove that they know something, and there's still people out there still trying to prove that they know something, they honestly don't know anything or what's going to happen in the end, which, shocking, Warren Buffett and guys like that have been saying that for basically 5 or 6 decades now. Nobody freaking knows what's going to happen. And no, I'm sorry, the guys that make 47 different predictions and say this stock's going to here and then it's going to here. Oh, let me forget that I made that prediction. Now I'm going to make this prediction. Oh, things change, therefore I changed my prediction to here, and then so on and so forth. And I got these 3 right, but I got these 47 other times wrong. So, that basically makes me right? Just look at these 3. Don't look at these other 47 over here. That sort of stuff happened on YouTube all the time. It didn't really happen before because in a bull market, of course, everything goes up. And as long as actually, if you pick trash stocks, they were going up too. But as things started to unwind and people started making more and more predictions and started making more and more changes, and you're just kind of saying nobody really freaking knows. You had people presenting themselves as long-term buy and hold investors. I'm a long-term buy and hold investor. Now they're traders, and that's okay. There's nothing wrong with that. I am not criticizing any other YouTuber out there or anybody else that wants to change their stance or, hey, I'm going to do something different during a recession or during a crash than I do during a downtime. All that sort of stuff is fine as long as they acknowledge, hey, I'm now trading. I'm not long-term buy and hold investing. I'm all good with that sort of stuff. But then you also need to know as an audience, if you're listening to a trader, a person who is actively trading the market, to get cues on how to be a long-term buy and hold investor like Warren Buffett, you're getting the wrong cues there. You can't do both at the same time. It just doesn't work. I mean, if I'm looking for tips on how to win the 100-meter sprint, I'm not going to a marathoner and asking them how to prepare for a marathon. It's not helpful in a 100-meter sprint, and vice versa. If I was going to run a marathon, I'm not asking the guy who's running the 100-meter dash, how the heck do I prepare for a marathon? It just doesn't make any sort of sense there, guys. Even though they're both track and field events and they're both, a track event that are both actually really, really difficult, they've required 2 totally different strategies, 2 totally different training regimens. Everything about it is completely different. So kind of keep that in mind when you're paying attention to YouTubers and who you're listening to. It's not saying the other guys are wrong or I'm right or anything else like that. It is basically just 2 totally different strategies, and you got to be able to separate the 2. Or you could find yourself trying to be a long-term hold investor because those folks were long-term buy and hold investors a year and a half ago, but now they're trading and now you're getting information you think is one and it's actually the other. Again, nothing wrong. There's no criticism here. There's no hate towards anybody whatsoever. It's just understanding the differences between those things. And number 4, starting off another year with absolutely zero plan on what you're going to do about anything. I mean, seriously, cool. You're having some issues, things are down, and you want to sell. What's your plan for that sell? What are you going to put that money towards when you sell it? What are your price targets for that new stock? Maybe you don't want to sell, so you want to buy, Tesla because it's beaten down. Great. What are your price targets? How are you going to react if the Tesla, falls down to another, 20% or so? Would you freak out? Are you going to sell and then try to buy back in again? What the heck is your plan when you're going on to do this? Have you even identified all the companies that you want to buy in the first place this year? Have you done your due diligence? Have you gone through all the earnings calls, all the financial statements? Basically everything required in due diligence to understand that company at a very high level, and then get a valuation for that company so you understand how much of a discount they're on. Now, I know a lot of the stocks we love are on great discount right now, and some of them just super duper stupid great discounts. But there's other stocks in the stock market that are significantly overvalued still. And I know we talked about them in the past, some of the old man stocks. Some of the stocks like that are crazy overvalued still. Even my favorite, Apple, although it's getting close to fair value, it's still a little bit overvalued. And so you've got to understand what fair value is in the first place before you can even understand, are you getting a discount or not? Is it a hype trash company that everybody was pumping for the past 2 years? Or is it a company with an actual long-term, basically future ahead of itself? Even if it's not profitable yet, are they heading in the right direction to basically be profitable? Do they have the cash on the balance sheet in order to maintain and kind of get through this down period that we're going to go through over the next period, year or so? And even if you have all that figured out, what is your plan to buy? How do you plan to buy? How much money do you have coming in monthly in order to make those buys as they come? And how do you want to kind of parse those buys out? Do you want to do a simple DCA? Which there's absolutely nothing wrong with that at all. It's one of the best strategies and one of the hardest strategies to beat long-term in terms of returns. Nothing wrong with that. Hey, how are you going to execute that DCA? And if you're not going to do a DCA, there's no problem with that. I like to use price targets and kind of DCA my way down as they continue to get cheaper. No problem with that, but you need to have all that stuff laid out ahead of time. Your entire investing plan, and mine sure is, it is all completely written out start to finish for every single stock that I own or that I want to own. And I would definitely suggest you guys get yourself there. Heck, it's a great place to plug my group, but you don't need my group in order to do that. I mean, great. I'd love for you guys to come on over. I haven't updated the website yet, so you can still get the discount if you want it. That's my fault. I've just had other things doing it. I hadn't jumped on there and done it. But you don't need that. You can jump on Google. You can sit here on YouTube for days and piece together all the information you need in order to create a great plan for your stocks. But you need to put in the work and have that plan laid out completely. So number 5, and this one's going to be a little bit controversial here, but waiting on confirmation on the economy. And what I mean by that specifically is waiting for the economy to get better or to turn around before I decide to invest. And I don't need to go back very far, but let's go back to the financial crisis and see exactly what that sort of mentality, I know they talk about it a lot, waiting on confirmation of this or that or whatever out there in the media. But again, we talked about that, right? Don't listen to the media. But you go back to the financial crisis and the bottom of that market was March of 2009. But all the way through 2012, the economy was not stable. It was still definitely the media narrative until about 2014 or so was it's not safe. The economy is on the edge. It could fall off again. It's getting a little bit better here, but then it's still bad here and so on and so forth. It went on forever. You did not have confirmation that the economy is strong till about 2014 or so. And the bottom was 2009. So think about that, guys. That was 5 years of the stock market going up before you decided to jump in because you waited on confirmation of the economy. And if you think you're going to have confirmation of the economy next year, probably not going to happen. We're not going to have that quote unquote confirmation that the economy is okay, but stocks are going to move well ahead of that. As you saw back then, they moved 5 years ahead of when the media and everybody else wanted to say, we had confirmation that the economy was okay. And even if you didn't want to take that, and you want to take other indicators, if I could talk, it was 2 to 3 years after the bottom before we finally had those indicators all kind of turn positive and have kind of a steady movement and confirmation that we were moving in the right direction. So if you wait on that, you might totally screw yourself out of all the best deals in the stock market. And the 6th and final way you can totally screw yourself, and I have seen this one 1,000 times over the past 20 plus years that I've been investing, and I still see it today. I saw it last year. I saw it the year before. I'm seeing it right now, not just on YouTube, in my group, everywhere. And that is long-term investors who are trading. I know we discussed it a little bit earlier, but the strategies can't be any more different. The reasons, the indicators, everything you're looking at is completely different for a long-term investor versus a trader. And a long-term buy and hold investor is not a trader, and a trader is not a long-term buy and hold investor either. Now you can do both, right? You can have your trading portfolio over here. Here's my long-term buy and hold over there. Nothing wrong with that sort of stuff, but I'm talking strictly somebody who's trying to be a long-term buy and hold investor who is actively trying to trade to kind of build capital or do something else. It just doesn't work, guys. It never has. It didn't work in a bull market the past couple years. It isn't working right now in a down market, and it's not going to work in the future either. The reason why I'm a long-term buy and hold investor is 1, it's way less stressful than trading. 2, in terms of statistically, it is the best and the best way to outperform traders because traders hardly ever and rarely ever outperform the market. And 3, name me the greatest investors of all time. Warren Buffett, Peter Lynch, all those guys like that. None of those guys were traders. I mean, really, seriously, think of the guy who's built up a $90 billion portfolio or whatever, trading. They just don't exist. They're just not out there, guys. Maybe there is and I'm missing it. I don't know, but I've been involved in the market a long time. And the guys who are always considered the greats of investing, they're just not traders. They're long-term buy and hold investors who managed to buy great stocks at great prices and held and continually made good decisions year in and year out. Not perfect, not everything rosy and great. No, hey, that was the best trade ever. Just continually making good decisions over the course of the long run have always outperformed the traders in the long run. So again, nothing wrong if you want to trade, but long-term buy and hold investing is less stressful and also usually outperforms. And unless you're a genius or you get lucky over the long run, you're going to outperform those folks that are trading. So I'll just stick with being a long-term buy and hold investor. And again, don't forget you can join my group as I haven't taken down the sale yet. So I mean, if you want to at least check out the website and see everything you get with it. And click here if you want to see all the stocks I'm buying during this market. And click here for my exact plan for what I'm doing during this market. So thanks for watching, and we'll see you in the next one.